What's up, traders? Andrew O'Connell here with Pristine Capital. Today we're going to talk about price action, trades, the setup moving forward. Let's dive into it. Before we jump into this video, quick risk disclaimer: nothing in the video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. Last but certainly not least, do not YOLO your entire account into any one of my trades. Let's do it. Box scores for today. S&P 500 is measured by the SPY, closed down 0.12%. NASDAQ QQQ finishing down 0.35%. IWM small caps finishing down 1.09%. And the Dow Jones dogs of the Dow finished down 0.2%. Very notable today, market breadth actually picked up. So today there were a ton of divergences within the market. Of course, this was our first, I guess you could call this a big down day. Not really, in a while. But what's interesting is that everybody thinks, this is the first down day we've had in a while, but it's really not. Yesterday the market was pretty much green across the screen, but the breadth was, pretty horrible. Breadth yesterday was like, 30%, 20%, really bad. Today was actually an improvement. Let's actually dive into the price action and let's take a look, because there's a lot of nuance with what happened today. So S&P 500. Let's take a look at this one first. So we've had 1, 2, 3, 4, 5, 6 days of price action, and now we're trading below pretty much all 6 of those days. I included this red line on my chart. I've been using this to trade against pretty much the entire day, and this is just showing us, yesterday's low of the day. So right now we're trading below the 5-day exponential moving average on the S&P 500. Next level to the downside would be the 20-day simple moving average. So that is the big question as we enter the tail end of the week. Are we going to actually tag this 20-day moving average? Let's jump into the hourly chart and let's take a look at what we find. So S&P 500, this is the hourly chart. These are our key moving averages, and we've been trading below this 20-period moving average for the past, I want to see, like day and a half, 2 days. And this is something where under the surface, most traders are not going to notice this because they do not look deeply at the price action. But this is something, we've been cognizant of for a few days now. Okay, so let's dive into these trades. I'm not going to go through all of these, but since we're talking about the S&P 500, so I had a lotto position that I put on the books, and I actually closed that lotto out on the SPY at 943. I had some September 10th 450 puts. Closed those out for $1.34, pretty much on this initial flush lower. Let's move over to the SPY actually. So yeah, I saw in the morning, this was at 9 o'clock. We got this flush. We broke below yesterday's low of the day. We couldn't hold it. So I was like, you know what? I believe it was on like this candle actually right here. Where I was like, you know what? I'm going to close out these puts. Pretty much the way the market always goes is like you'll have these long lower wick candles. I think it may have been, one of these guys. And then the market just surges to the upside. So I closed out my lotto for a nice winner. Closed out for 134. I paid 111. Then I had a put spread on SPY that I closed out for $1.47. I actually tried day trading some calls at 9.55, took a quick stop on those at $2.92. And really at 10.28, this was when I realized like something is wrong here. The dam might break essentially. Let's pull up our 5-minute chart. See, at 10.28, where were we? So so we were starting to break down right up here. So yeah, we made an attempt at entering our daily value area and we got rejected pretty hard. So right up here, I was like, you know what, I'm getting short again. So yeah, I ended up entering into a pretty crazy lotto. First off, I closed out my Disney September 17th 182.5 calls. That was a lotto I put on yesterday. Closed them out for $5.20. I'd paid $3.11 for those. So almost a double on those, which was awesome. And then I entered in short on SPY. So I entered some SPY September 8th 450 puts for 52 cents. And what was interesting about this one was, so I put this one on and almost immediately, because you know, this put option expired literally today. Almost immediately, this thing just exploded to the upside. So I timed this, you know, pretty well here, where I was like, this is happening, like it's happening. Pretty much I got in right on this red candle over here. And then, yeah, we ended up just falling into the abyss. So we fell all the way down. We hit a low of 448. And really what I did was I just started taking exits on this thing in increments. So I closed out a third for 90 cents. I had paid 52 cents. I closed out more of it for $1.18. That brought me down to a half of my position. Then I closed out more of this for $1.42. And then I have some more trades. Yeah, I closed this out for $1.42. And then I closed out the remainder at $11.02 for 78 cents. So by the time all was said and done, you know, this was 10:45. Now when I was closing out my final piece, that was at 11, right as we were getting this green candle. Pretty much that was it for my short trade. Like, I captured a good piece of this downside move, and I was like, you know what? Like, I'm done on the short side. I was out of all my shorts, and I was like, this is pretty crazy. I just made like over 100% winner literally in like 15 minutes. So that was pretty nuts. And then, yeah, from there, let's take a look. So that was my SPY trade, and that was really like how I handled this price action. But let's take a look. Let's jump over to, you know, let's look under the hood a little bit, because then I started to see some more strength in the market. So let's go over to our Finviz Heat Map. And yeah, the breadth was, I mean, not the best. It was, you know, sub 50%. But really the source of the weakness was what was happening in some of these mega cap tech names. So Apple was down over 1%. Facebook, Google, Nike was down. Nvidia was down. AMD was down. So what's very interesting is that if these stocks were all up today, we could have a ton more of these other guys that were red, and it wouldn't even matter. It would be like, oh yeah, the indices are up, you know, awesome day, whatever. But when these stocks are down, it really doesn't matter what the rest of the market is doing. These guys can really drag the rest of the market, and that's essentially what happened. So yeah, Facebook, Tesla ended up flipping from red to green today. Nice performance from Tesla. Let's check this one out. Yeah, finished up 0.13%. So I'll be watching this one into tomorrow's session. So yeah, breadth was bad, but not horrible. It was just the FANG names taking a break. And let's see some of these FANG names. So Apple. Yeah, I mean, this is what I talked about yesterday, where is Apple really just going to continue to move up in a straight line? Of course it did not. So down 1%, only down to the 5-day EMA. Nothing crazy or, you know, scary about that. Facebook, very similar dynamic, down 1.21%. Facebook's actually looking pretty solid here. You know, we have this nice cluster of price action. The 20-day simple moving average is starting to catch up to price. But let's jump into the next divergence that I saw in the market. So the VIX. The VIX actually closed down 0.99% on this down day in the market. So that definitely got me like, like maybe, you know, maybe there's some upside to be had here. So I started adding to long positions after closing out my short. Because, yeah, the VIX closed pretty much on the low of the day. And then also the VVIX, which I watch very closely, it closed up 3.65%, but pretty much finished out also towards the lows of the day. So definitely a pretty big divergence, you know, between what the S&P 500 was doing and what, you know, the volatility complex was doing. And then we'll take a look at our sectors and style factors. Sectors. So yeah, pretty big bloodbath. KWeb was down 3.47%. What else did we have? A lot of these things got pummeled. Social media stocks down 3%. ARK FinTech down 2.72%. So yeah, it was a bloodbath. MSOS, this cannabis ETF, down 2.48%. See this MSOS, this thing has just been getting hammered. And what's nuts is a lot of these companies in the index have really good fundamentals. Yeah, so down 2.48%. We do have a VPOC down here at 29.66, so that could be, I'm actually going to set an alert for myself down here. If we take that out, might end up getting long. But yeah, so a lot of these areas of the market just getting absolutely pummeled. So those are our sectors. Were there any bright spots? So consumer staples, utilities, medical devices, real estate, and industrials. Industrials is like the one oddball. But yeah, pretty much all the defensive stuff was doing pretty well. And then, yeah, that holds true when we look at our style factors. Style factors. Green ones were high div, low vol, defensives, and min vol. So definitely a very defensive configuration. Definitely not risk on. So this is more confirming the weakness. And then, yeah, really poor performers. High beta was down 1.21%. International momentum was down. International value. So yeah, you know, pretty weak across the board. So we had that volatility divergence. But then, yeah, these style factors really say, hey, this market is getting a little bit weaker. Which happens. You know, pullbacks to the 20-day are normal. Pullbacks below the 5-day EMA, also very normal. Well, I ended up taking on some long positions. So we'll see, you know, if the market does get a bounce tomorrow, that'll really be helpful for me. But if not, you know, I might end up closing some of these out. So I got long the small caps via some calls. I got long Datadog via some September 17th 139 calls. Let's take a look at Datadog. This one looks pretty awesome. Datadog, yeah, finished up 1.61%. Look at this. So this was off the power earnings gap right here. And it's just continued to drift higher after reporting earnings. We got a nice shakeout below this 20-day moving average today. And look at the weekly chart. This thing just looks awesome. Look at that. So we're forming like a really nice flag. So I was like, yeah, I got to get long this thing. Like, it just looks great. So we'll see what it does over the coming days, weeks, months, etc. And then, yeah, I did so much trading today. We can't go through all of it. You can take a look here if you're interested. And then, oh yeah, one stock trade that I did, I took a stop on my Elastic. So this, you know, I have this stop hard coded in my trading software. And yeah, I stopped out of this for 166.67. I had paid 168.90. So yeah, it took a little paper cut in Elastic. I do think that one recovered a little bit though. So let's see. STC. Oh no, it did not. Wow. So I'm glad I took that stop. Jeez. Let's see this one. Yeah, it finished down 4.94%. Wow. So I stopped out literally, you know, at 9:32 I posted this. I'm pretty sure I got kicked out like right on the open for 166.67. So yeah, I got kicked out, you know, pretty much like up here. Somewhere around here, yeah. And yeah, look how much further this thing went. So it just goes to show, like, using stops, you know, definitely can be helpful. And then let's check out our VicTech options races. Let's see. Let's see what was going on. I'll definitely be checking tonight, you know, the put to call ratio, all that good stuff. Let's see what happened today. So Tesla, of course, almost always our flow winner. Dick's Sporting Goods moving up the ranks over here. What's going on there? Yeah, so Tesla, Amazon, SPY, Qs, all this stuff's pretty normal. BBig, I think, is like the latest like short squeeze play, which I never really participate in those. That's just not really, I don't really have a strategy around those. I probably should develop one though. And then DKS. Let's check out Dick's Sporting Goods. Okay, yeah, DKS, this one also had a really nice earnings, and it looks like it just flopped over today. Looks like maybe some players, you know, they're trying to buy the dip in this thing, but yeah, I certainly wouldn't be touching this thing after this down 4.22% candle. Oh yeah, one more trade that I did put on. So I like this setup here. You know, it was this PDD. Where was this? I put this on kind of early. Oh yeah, right over here. I entered a call calendar spread for the 135 strike. So I got long the November calls and I got short the October 15th calls for $1.98. So with this trade, you know, I've been very bullish on these Chinese equities. I think that PDD could get up to this 200-day moving average. So that's why I chose the 135 strike. And by using the calendar spread, you know, that just allows, you know, even if it takes a while to get to my target, I have that short leg of my option, which is actually making me money, and I don't have to worry about the theta decay. You know, I'm actually earning some theta decay as this thing just continues to back and fill, trade sideways. You know, it can do its thing. So yeah, really like that setup. That about does it for this market recap video. As always, we're going to have to see what the river brings tomorrow. Hope you all had an awesome session. I will see you all in our next video.